Hello, Investing Putts, back with you again. Sorry it's taken me so long to make another video. Been busy with life, but it's all good. Um, so I use Robinhood for my main test account, and they do give you the right to participate in IPOs. And I noticed that they let people go into the Robinhood IPO. I know a lot of people hate Robinhood, but I actually kind of like it. I think it's been good for the investing community, even if it's got its issues, certainly with its business model. But I actually like it. So anyway, I did apply for and received the right to purchase 100 shares at $38 when it went public on July 29th of 2021. I can't sell those shares until August 29th, or else I'm locked out of other IPOs for like 90 days. So I'm figuring I'll hold on to these shares. Now the IPO was actually surprising to me, was undersubscribed, and it took a lot of flack in the press, and the shares actually were down about 10% in the first day of trading, down to about 35 bucks until options trading was started on August 4th. And on that day, the share price doubled. I think it's what they call a gamma squeeze. So anyway, just huge buying pressure on the call side required market makers to buy shares and hold a collateral. So yeah, share price peaked at 70 bucks that day, and it's been trending down ever since then. Right now it's at about $50 a share, plus or minus. So since I was kind of locked into this long position of 100 shares, which is really more than I wanted to, on a $25,000 account, that was a $3,800 investment, so like 15% of my account. So I wanted to hedge that risk. So I started selling covered calls on August 4th. And since the share price has been going down, it's a great environment for covered calls. You've got these 100 shares, you've locked in a huge profit, but the share price is kind of trending downwards, so the calls that you sell don't get never go in the money. And it's interesting to note that initially, at least the first few days, there was a huge skew on the options pricing. So, for instance, like an at the money call was priced like a 60 or 65 delta. Usually, it's a 60 to 50 delta. When you have just huge buying demand for calls from the kind of the Wall Street bets kind of crowd, it's gonna really make call options expensive. So for an option seller like me, that's great. So long and short of it, I've been able to, my current cost basis on these shares is only $12.15. So less than a third of what I paid for them, and less than a quarter of what the current stock price is. So let's see how I did that. So here's a price chart. It's only been trading for 2 weeks now. So the blue curve is the stock price, and the little red dotted lines show the covered calls that I sold. It shows the strike of the covered call and the duration of the covered call. So let's just go over one by one. The first call I sold was a 70 strike, August 20th expiration. So this is really only 2 weeks out. I don't usually sell calls that are that close to expiration, but I figured, you know what, this thing's volatile, so it's okay. I got a whopping $12.60 a premium for selling that. I typically buy them back when they get to about half their value, so I bought it back when it went down, the price went to $6.30. I immediately sold another covered call, this time a 60 strike, same expiration. Got $10.80 in premium for that, which I then sold back for $5.40. So at that point, the stock had started to calm down a little bit. So I went, say $5 out of the money and sold a 63 strike covered call expiring in about a month out, September 3rd. Got a huge premium for that, $8.20, and the share price kept going down, so I bought back that covered call for only $2.50 on a Monday morning. I immediately sold a 56 strike expiring on September 10th. Again, this was out of the money, and got $4.50 in premiums, almost 10% premium for an out of the money call. It's insane. I bought that one back for $2.55, and I have one on right now. I sold one that was actually in the money yesterday, I guess. I sold a 45 strike call expiring on September 10th for $6.50 in premium. So I'm really, at this point, now that the stock's kind of calmed down, I'm thinking more in terms of hedging. So I've got 100 shares of stock, that's 100 deltas. I really only want to hold maybe 30 or 40 deltas net. So I'll sell like a 60 delta call against it, which happens to be in the money at this point. Okay, so my share cost, about 100 shares at 38, so my share cost was $3,800. After selling 5 covered calls, I have brought in a whopping $2,585 in premium, which drives my cost basis down to $1,215, or over 100 shares. It's a share price of $12.15 versus the current share price of about $49. So it's just kind of insane what you can do on if you kind of hit it right on shares like this. But the thing that the lucky side was that I had to buy the shares, and I had to hold the shares for their massive price up. But I've been able to really beautifully protect those gains, and at this point the shares could crash to $12 a share and I would still be break even. So, and interestingly, so these two, the first 2 covered calls that I sold, which were out of the money, actually were 60 delta calls, believe it or not. So, or at the money, or just a one strike above the money. So kind of crazy. So my account, before I got into Robinhood, I had been my test account was designed to see if I could beat the index. So, and actually I was. If you look up to about September 1st, I actually was doing pretty well with my more traditional poor man's covered call portfolio. Then the Robinhood thing came along and it just blew up. So I'm beating the S&P by about 15% right now, but they kind of screwed up the comparison because I got lucky on Robinhood. So anyway, I thought you might enjoy a little story. Even putzes get lucky once in a while, but so I got lucky and made $3,000 or $4,000. But now the question is, you got to repeat that over an entire portfolio. It's a lot more challenging. So anyway, leave your comments or insults or whatever in the comment section, and look forward to seeing you in the next video. Bye.